Welcome to Rise Up Today channel. We are excited to have you join us on this journey as we share our passion and knowledge with you. Our channel is dedicated to providing entertaining and informative content on a variety of topics, ranging from technology and science to motivation and lifestyle. What is blockchain technology? Blockchain technology is a decentralized digital ledger technology that allows the secure and transparent transfer of data or value between parties without the need for intermediaries. The data or value is recorded in a series of blocks, which are cryptographically secured and linked to each other, forming a chain. The key features of blockchain technology include decentralization. Unlike traditional centralized systems, blockchain technology is decentralized, which means that no single party has control over the network. Instead, the network is maintained by a group of nodes that validate and record transactions. Security. The data or value stored in a blockchain is secured by cryptographic algorithms, making it virtually impossible to alter or tamper with. Transparency. All the transactions in a blockchain are recorded and stored in a public ledger, which means that anyone can view the transactions. Immutability. Once a block is added to the blockchain, it cannot be altered or deleted. This ensures that the data or value stored in the blockchain is permanent and cannot be changed. Smart contracts. Blockchain technology also allows the creation of smart contracts, which are self-executing contracts that automatically enforce the terms of the agreement. Blockchain technology has a wide range of applications, including cryptocurrency transactions, supply chain management, digital identity verification, and voting systems. How are cryptocurrencies regulated? Cryptocurrencies are regulated differently in different countries. Some countries have adopted a friendly approach towards cryptocurrencies, while others have imposed strict regulations or outright bans. In general, cryptocurrency regulations focus on three key areas: registration and licensing. Some countries require cryptocurrency exchanges and service providers to register and obtain licenses before operating. This helps to ensure that these entities comply with relevant laws and regulations, such as anti-money laundering, AML, and Know Your Customer, KYC, requirements. Taxation. Cryptocurrency transactions may be subject to taxation in some countries. Tax authorities may require individuals and businesses to report their cryptocurrency transactions and pay taxes on any gains or income generated from these transactions. Consumer protection. Cryptocurrency regulations may also focus on consumer protection, such as ensuring that investors are adequately informed about the risks associated with cryptocurrency investments and protecting consumers from fraudulent or deceptive practices. The regulation of cryptocurrencies is a complex and rapidly evolving area, as governments and regulatory bodies try to keep up with the fast-paced development of the cryptocurrency market. Some countries have taken a more hands-off approach, while others have imposed stricter regulations. It is important for individuals and businesses involved in the cryptocurrency market to stay informed about the relevant laws and regulations in their jurisdiction.